How likely is a recession in 2020? This is the question of the hour, and it's on everybody's mind. Hi, I'm Souza with Berkshire Hathaway. We need to remember that next year is a presidential election year, and probably one of the most controversial elections yet. There's going to be a lot of questioning and political debates about the economy. Why is it so good? And questioning if our economy is going to decline. So this can stir up a lot of hype. There have been 4 major surveys this year asking experts if they believe we're going to see a recession. 67% do believe that we should see a recession in 2020. Balsamic surveyed analysts, 59% believe that we will see a recession. So why do we think this is going to happen? Well, we've been in the longest recovery in American history, so we should expect to see a slowdown. The GDP will slow down, but let's look up the Webster's Dictionary's definition of what a recession is. It's a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in the GDP, gross domestic product, in 2 successive quarters. We need to remember that recession does not mean housing crisis. In 3 of the last 5 recessions, housing prices actually increased during the recession. Obviously in 2008 was the most drastic. So now the same survey from Balsamics that asked if they anticipated a recession, they also asked in the same day, at the same time, the same exact survey and the same analyst, they were asked what would trigger the recession. Number 1 on the list was trade policy. 2 was stock market conditions, and 3 was a geological crisis. Number 9 on their list of triggers was housing slowdown. In 2008, our largest decline in appreciation was because of the housing slowdown and the situation the mortgage industry was in. This year, we're not even in the top 8. Also in the same survey on the same day, they asked about the median appreciation of housing. All of the analysts said that the housing prices are going to continue to go up, not down. So appreciation is going to slow down a little bit, but the prices are still going to continue to go up everywhere, from about 2.5% to 4.1% through 2023. So why is this important to know? Well, we don't want to get in a panic about buying and selling and become afraid that it's going to be like it was in 2008. So in fact, Morgan Housel, a well-known financial analyst, said, "It is an interesting thing is that the widespread assumption that the next recession will be as bad as 2008. Natural to think this way, but statistically, highly unlikely. It could be over before you even realize it began. Prices and appreciation are expected to just be more normalized. Don't let all the hype about the recession scare you from your dream and benefits of home ownership. In my opinion, it's one of the very best investments that you can make." According to Mark Fleming, First American's chief economist, if the 30-year fixed-rate mortgage declines just a fraction more, consumer house buying power will reach its highest level in almost 20 years. So what does that tell us? It tells us not to be so caught up with all the hype. Make the move if it's right for you. And as always, if you have any questions, give us a call. Please feel free to reach out to me. I'm Souza with Berkshire Hathaway, helping you be more informed on what the market's doing. If this was beneficial to you, please be social and comment, like, or share with somebody that might find it beneficial as well.